edition of the CFO Club podcast with myself, Nicholas van Wyk, the CEO of SIBA, and also the editor for CFO Club. And with me today, I've got Dr. Christian Ayiku. He's the CEO at Dafri Bank Digital Limited, and also a featured speaker at the seventh edition of the CFO Africa conference, co-hosted between Marcus Evans and the CFO Club. It's something that the CFO Club has been involved with for a number of years, and I'm always amazed with the wonderful speakers that Marcus Evans are able to gather. And this year it'll be at the NH Hotel in Sandton in July. So I would really recommend that you make an effort as a CFO, financial manager, to join the CFO Africa event. I'll also be a speaker together with Christian, and there's quite a big variety. So the CFO Club started about 2 years ago when my organization, the Chartered Institute of Business Accountants, identified a need to cater for all types of CFOs. What we discovered is that CFOs sometimes have an accounting background, but most often than not, especially in places like the United States and Europe, they come from a very diverse background. For example, they add an MBA to their accounting qualification, or they might be from engineering, actuarial sciences, or marketing. And just yesterday we spoke with a big corporate when I shared with her this discovery of ours, the manager then told me that their previous CFO came from a marketing background. And I know marketing at the higher levels do get a lot of, go into a lot of statistics and analysis. So that also kind of makes sense. So the CFO role is quite diverse, crucial role in business. We're all, I suppose, attached to the traditional role that of accountant, but there's so much more to the CFO's role, especially in the modern world, catering for things like strategy and operations, IT and HR, and really adding value to the business and interpreting. And this brings me to our next guest, Dr. Christian Ayiku, who will now share with us his career development as well as his duties and functions and responsibilities in his new role as CEO at Dafri Bank. And then we'll be discussing the interesting topic that he's going to present at the upcoming CFO Africa conference. Welcome, Dr. Christian.
Thank you very much, Nicholas. It's been about 4 years since you featured me when I was then leaving EcoBank Group in Togo. It's amazing how quickly time flies. And yes, when you featured me, I was then in a CFO role. And true to what you said, the CFO of today is not your traditional chartered accountant, because it requires a multiplicity of disciplines for you to efficiently and effectively deliver in that capacity. And hence you have lawyers, marketers, and that sort of thing being CFOs in today's businesses. And I would imagine the type of CFO for a specific organization depends on the core focus of the organization. So if you have, let's say, the type of retailers who are doing online and that sort of thing, you would require a CFO with a strong background in operations. If it's financial services, someone with a strong experience in managing financial services and that stuff. But then having said that, to give a bit about myself, between when we last had a chat and now, yes, I'm a Pan-African senior board director with extensive experience across diverse industries, not-for-profit, private equity and venture capital, agriculture, telecommunications, banking, and oil and gas. I am a chartered accountant holding an honorary doctorate in business administration, that's banking and finance specifically, having received an international recognition as an award-winning CFO for innovation and excellence in Africa. My career spans over 24 years. My experience encompasses corporate governance, strategy, performance management, accounting, and business development, reflecting a profound commitment to driving organizational success. My dedication to societal empowerment is evident through my adherence to values guiding my impactful contributions across industries I've been associated with so far. Beyond my professional endeavors, I am involved in entrepreneurship, missionary work, and philanthropy, reflecting a holistic approach to making a difference in the world. Okay, with a firm belief in the importance of human capital development for unlocking creativity, value creation in societies, I champion the manifestation of one's purpose in life through strategic vision, business transformation, and stakeholder management. That's it about me by way of introduction.
Thank you very much, Christian. It's quite an interesting CV that you have, spanning a wide variety of countries that you worked in, interests and skill sets. It's nice to know that we have this kind of caliber of CFOs in Africa. I'm always amazed when I do like an economic overview of the world, then you can see how small Africa is in the world economy when it comes to, for example, GDP. And we all know the history behind that, colonialism and structural issues in the world and how the world is set up. But considering demographics, we know that Africa is the youngest economy, youngest continent in the world. So the future belongs to Africa. Doesn't really matter what happens to economics. We know that the West is aging and also China's one-child policy is creating issues for them. And then there is so much wealth still in Africa to be developed. That's obviously the biggest benefit of having and doing business in Africa is this tremendous growth potential that the continent of more than 1 billion people can unlock. And I think your topic that you're going to present at the CFO Africa conference, co-hosted by Marcus Evans and the CFO Club, is quite interesting because I think there's real progress that can be made with digital currency. And you're now currently working with an industry and an employer that specializes in this. And your topic at the Marcus Evans event is how CFOs are prioritizing digital payments to maximize efficiency. So just before we started our conversation, the recording on the podcast, you and I shared some background to digital currencies and stable coins and how they're being used in Africa. Just explain that to our users, what's happening currently in digital currencies. We know about Bitcoins, Ethereum, stable coins and the like, but explain that to us in an African context.
Thank you very much. So we all know about the famous Bitcoins and then the Ethereums and that sort of thing. There's also another class called the stable coins. The stable coins are backed by commodities. So commodities, there's a wide array of commodities that could be used. It could be gold, it could be silver, precious metals, it could be fiat currency. So fiat currency is paper currency. That's dollars, euros. You could even use the rand, the ZAR, and that sort of thing. But the landscape of cryptocurrency has been very volatile, especially in Africa. Some have gotten it right, some have gotten it wrong. And like every new thing, I always say, don't put all your eggs in one basket. Just put only a portion of your eggs in the basket so that if things go sour, you don't get impacted. So there's been times when with the valuation of Bitcoins and other cryptocurrencies has nosedived. There's been other times when it's shot the lights out. It's basically been around the issue of sentiment in the world. Like the popular saying goes, when when the Americans sneeze, the Chinese catch cold. And so you need to be aware of some of those things. And again, the Ukraine-Russian war, and then the Palestinian-Israeli war, and other pockets of issues. All these things go to influence the pricing of or the value of cryptocurrencies. Stable coins, yes, are also a category of cryptocurrencies backed by commodities. But then if those commodities are impacted, then you can as well imagine that the stablecoin value is also going to be impacted. Yes, some institutions, some businesses are using it for payments across Africa, but then it's at various levels of utilization. Some countries have shied away from it. Some countries have embraced it. I'm aware in South Africa, as of October 2022, the Financial Service Conduct Authority had started recognizing cryptocurrencies as digital asset. So that's the little bit to share about the crypto world.
It's very exciting development for Africa, and it's something that definitely will impact CFOs and how they do business in Africa. My understanding is that we have currently currencies that's money that this gets printed by central banks and it gets into the economic system. But now we have a way to facilitate bartering based on different commodity types within digital platforms, which just enhances our ability to trade. And I can clearly see that there's a need for assurance providers within this setup. For example, if you have livestock or you have to verify whether they really exist. The same goes for businesses and such, because that's the underlying asset on which the currency is based. But coming back to the topic that we're discussing, and your presentation at the upcoming event, the CFO Africa Conference, that's now happening in July. My first question is, what key factors should CFOs consider when developing a vision for the future of payments within their organization?
Thank you for that question, Nicholas. Just before I answer that question, I just want to add on top of cryptocurrencies that one other area which is catching a lot of attention is central bank digital currencies. And this is the next revolution, which is going to ensure that people will no more, that citizens will no more carry large amounts of cash, paper money, or metal coins in their pocket to transact business, but then everything will be digital. So your monies will be stored on the blockchain, and you transact based on that. The of that is that the sovereign is then able to manage the economy very well, because at any point in time, digital currencies that have been issued out, it makes the world a safer place, and ensures that money launderers and all those kind of undesirables are kept out of the formal economy. So to the question, what key factors should be considered when developing a vision for future payments within organizations? Factors to be considered in this case in any organization would primarily involve recognizing the payment characteristics of the current customer base, and then imagining future customers and their requirements in order to address current shortfalls in payment efficiency, to protect revenue whilst remaining agile in embracing convenience, costs, and time as key ingredients driving future strategy of payments. Because customers will always compare the organization on those parameters with competition. So just to practicalize it, let's say, Nicholas, you are running a Pick and Pay. You would obviously want to understand in terms of payment solution where you are currently compared to the industry you operate in, and what is the industry benchmark. Form some kind of gap analysis, and then on the basis of that, say that you have X number of customers. This is what they are doing. Yes, let's ring fence that revenue. But then in order to catch up with the industry, we need to bring in Y number of customers. And these Y number of customers have a preference for specific payment channels. So how do we then onboard them by ensuring that we have those payment channels? Because that is going to give those customers convenience. And then we need to ensure that in terms of cost, it's not so much burdensome. The value to be gained will be more than the cost. And then in terms of the third point I mentioned, in terms of time in terms of processing, there's been situations where you want to effect payment on a gateway, and it takes forever for the payment to go through. And you can imagine the frustration that comes with that. You immediately say, look, I don't want to work with this specific institution because they are just wasting my time. And then you move on to the other organization. Then is payments processing are measured in microseconds as well. So when you click the go button and you see the thing dancing, and forever 2-3 minutes, is a sign to tell you there's something wrong. Thank you.
Thank you, Christian, for that overview and insightful commentary. So there's a few things I wanted to ask with you. So you mentioned that the Central Reserve banks considering now digital currency, and my question, the risks I can identify, I can clearly see the benefits with the digital currency. Right? It's quite obvious. But if we look at the past history of state actors and central banks with the current fiat or fiat currency system, I think the US is the best example of printing money and getting these bailouts. So that causes a huge amount of digital money in the system, driving up inflation. And whenever it seems to me, and I'm speaking as a layperson, it seems to me whenever one of the political parties wants more votes, they just open up the printing press in the US, and then there's more currency. And then also with regard to cash, I think it does give a lot of control to the user, that it's the person's asset that he's now utilizing, or which reflects the person's competencies and skills and ingenuity, the cash that the person has. So cash is a reflection of economic activity and achievements and such. So if you hand that over to a computer, for example, a digital currency, there's clear risks there. Obviously in monitoring activity, because it's all, even good people want to maintain privacy, and how do you maintain that in a digital system? And then it seems like every week there's crypto or there's cybersecurity issues. A big bank in South Africa gets attacked and then loses their subscriber details, or the CIPC that registers companies and has all the directors' details, they get hacked, and then the information is shared on the dark web. So there are some clear risks, and I'm sure the regulators will be looking at those. But there's positives and negatives. In your engagement with policymakers and decision makers, how will they be addressing the risks I've just highlighted when it comes to digital currencies or digital payments?
So you are right in what you said in terms of concerns around the challenges. Yes, the U.S. has been doing, the U.S. is a very good example. It has been doing quantitative easing. The currency is not really backed by a commodity, but the reality is that since the agreement between the Americans and the Saudi Arabians regarding pricing of oil and gas in USD, they've been able to entrench the usage of dollars across countries globally, and most central banks keep their reserves in dollars, and this is what has made the US dollar very popular. Having said that, yes, we know BRICS is in the picture, and they are trying to de-dollarize and that sort of thing. They are using the angle of utilizing local currencies to effect their buying and selling, backed by commodities, gold, and that sort of thing. I think this year, when they have their meeting, they are most likely to come up with a decision on how to have a payments protocol amongst the members. But having said that, the opportunity with central bank digital currencies seem to outweigh the challenges, from the perspective that central bank digital currencies facilitates financial inclusion. Bear in mind, the majority of people who do not have access to the financial system are mostly in the rural areas, and they tend to form the bulk of the population. There's a need to bring all those people into the formal financial economy. So financial inclusion is enhanced. Accessibility to finance is also enhanced. There's efficiency in the sense that costs required to access the ecosystem is lower than the value that you derive from it. I was watching one of these clips on YouTube recently, where I saw one of the Scandinavian countries have developed a chip where all your records and money transactions and whatever is deposited on the chip, and it's put on your wrist. So when you get to a checkout to pay for something, a commodity, grocery, or that sort of, you just swipe your wrist and it just takes it off, sort of thing. I mean, that's where it's getting into. It also enhances resilience. It reduces use of illicit money, and then there is monetary sovereignty. I agree there's an issue of cybersecurity issues and that sort of thing, but the technology being proposed to drive this phenomenon is the blockchain technology, which piggies from the world of cryptocurrency. Traditional ways of capturing our IDs and that sort of thing is more or less centralized on a system. So it makes it easier when a hacker is able to hack into a system. What it then means is that they steal all the information, and then they are able to sell on the dark web. And what then happens is if you happen to be an Elon Musk and you are part of the data that has been stolen, you can imagine the ransom that will be taken from you. But if it's people like me and you, Nicholas, I mean, they would definitely realize there's nothing in our accounts to really leverage on compared to someone like an Elon Musk or a Jeff Bezos. But then if you look at the blockchain technology, the way it works, it operates on several computers. So whatever you onboard yourself as, within your ID, your account numbers, and that sort of thing, it's all distributed on a network. And for the hacker to, really hack into it, he needs all that information. And it's very difficult for the hacker to go into all the computers because your information is within a secured vault, a wallet. I mean, we call it a wallet. And for you to do the verification, you are given a key that has been scrambled. So that is your only way of interfacing with other services on the blockchain network. And not until you have that key, you can never penetrate into the system. That is how the central bank digital currencies are going to work on. And I can imagine as we move forward, in time, there would be more and more innovative ways of ensuring that security is not so onerous. Thank you.
Thank you very much, Christian. Yeah, I think it's a complex issue, and I can clearly see we need strong regulation. We need, as citizens, we need protection from hackers and bad actors, but also I can see our public protector that has been established will get a new function, and that is how do we protect citizens from abuse of the digital platform by even governments can be infiltrated, and just imagine if there's a bad government taking over in a coup or something, how much worse their impact can be. There's now a digital centralized system that they can control and influence. So so I think as a society we're facing the same risks. It's just more intricate and complex because of the digital currency. So it resolves many things, like you said, accessibility, but it also raises the stake on what now can go wrong. Because the mistakes and the effects is so much bigger now if we get this wrong. So regulation to me is very important. And then also, how do you, the CFO as an important decision to make, like you previously used in your example. You said Pick n Pay, you need to be accessible, and what does your clients use? So Checkers in South Africa has made some major inroads. They just I don't know what they were starting to get to eat every morning or drink, but they are exploding in their strategic interventions and new innovation. And in the media has been reported Pick n Pay is really struggling. They kind of still in a very old frame of thinking, haven't adjusted properly. So you can clearly see the entity that's going to get this right in digital transactioning will have a big advantage over other entities. So my second question, how can CFOs effectively research and identify the best digital payment methods to align with their specific business models?
So to research and identify the best digital payment methods, I think we've talked about this, some elements of this in the previous question, but then the reality is that to understand the payment preferences of customers, it starts generally with the payment preferences of customers, because they are going to drive how you interface with them. It's not about the organization telling the customers how they do a payment. That's how, this later point is how most organizations have run their businesses up until now. And at the end of the day, you end up realizing that you are not able to optimize business by way of catching more customers. Because if customers are not happy with your processes, you only get a few of them. So you firstly need to understand the payment preferences of customers using the market leader of your industry or your chosen peers as a benchmark to derive the gap between where you are and where you desire to be. So with the example you just mentioned, Checkers, being at the end of the curve and Pick and Pay struggling. I can imagine with the changes happening at Pick and Pay, they might want to then understand what Checkers is doing that they are not doing to catch up. Secondly, is to realign your business model with clear deployment plans around what is tactical and strategic based on your capabilities, especially around people, processes, systems, and capital. I mean, the reality is that much as you want to be like the market leader, there's always a constraint around the capacity of the people you are having. Questions like, do you need to retrain them, reorientate them in terms of customer service and that sort of thing? Do you need to realign your processes to make it a bit more nimble and efficient? The other bit is, do you have the capital to roll out immediately, or you need to start tactically and then give yourself a journey, say 3-year journey, where you say the first year is tactical and then the second to third year is strategic to be able to catch up and play at where you want to be. At the end of the day, all this must funnel or transform itself into the value you bring into the organization. The third point is then to execute the flexibility in response to the customer preferences. The key word there is flexibility. Flexibility in the sense that technology is always leaping forward, and every now and then something new comes up. So in as much as you will be having your tactical plan, if by the end of the first year, new ways of doing things technologically has reared its face up or shown up, you should be flexible enough to reiterate what your strategic plan then is to align with it. Otherwise, you'll be left behind. And it ends your bottom line and that sort of thing. Thank you.
Thank you so much, Christian, for that nice summary and I suppose also a practical case study or map that CFOs can follow. Those of you that just joined us, I'm interviewing Dr. Christian Ayiku. That's Ayyiku. And I'm looking now on his LinkedIn profile. He's quite a large number of followers on LinkedIn. So he must be doing something right. Also, his background is very impressive. Everywhere he worked, and the education is also very impressive, Christian. So those of you that want to connect with Christian, please hop over to his LinkedIn page. I think he's one of the leading minds when it comes to banking and cryptocurrency. And if you're a CFO that needs to expand into Africa and need a digital partner or work with Dasri Bank, I think Christian is your man. Christian, we'll be seeing each other at the CFO Africa Conference of Marcus Evans in July. I'm looking forward to that. Any last comments for our listeners? Looking forward towards the conference and also the new future of digital currency.
Thank you very much, Nicholas. So my last comment is that digital payment is currently the way to go, I can imagine there are organizations who are so caught up in manual payments and that sort of thing. It's more around how you see the world, how you see your organization aligning to it, and also around the value you perceive to derive out of it strategically. And once you put all these things together, you would then be able to understand where you are and what you require to get there. And finally, what I would want to say is you can never go wrong when you start embracing digital ways of doing things, because what you are essentially doing is that you will be allowing technology to enable you to perform things that you were doing manually. Anything manual is prone to errors. But then with technology, yes, somebody will say technology is also prone to hacking and that sort of thing. But the key is that even with the potential for hacking and fraud and stuff, technological advancement has ensured that there are systems in place that you can acquire, or if you have capacity to build in-house, you deploy to ensure that you are able to always extract fraud before it happens, or you are able to check compliance, to whoever is sitting on your base and that sort of thing. And there's always the speed of delivery compared to keeping things in book and on Excel and that sort of thing. So digital is here to stay, and it's only going to boom. Thank you very much.
All right. Thank you very much, Christian. And that then concludes our podcast for today with the CEO of Dafri Bank, Christian Ayiku. And if you are interested in the CFO Club, please go to the CFO Club website, cfoclub.co.za, or find us on LinkedIn. We do have amazing resources and networks that we've created for CFOs in Africa, connecting like we do now in podcasts, and also doing CFO tours to international companies like we're now doing in September. And everybody's invited. And then I'll see you at the CFO Marcus Evans 7th Africa Conference. Thank you very much, Christian.
Thank you very much. Have a great day.